720. This is a debit. We are crediting the debit account. That's the opposite thing to it, making it go down. So it's the first time we actually got paid on work we did on account, which is exciting because we were getting worried that we were never going to get paid on the work that we didn't collect cash for, and now we are, so that's good. So we got the money there. Now, note that we hit the receivable now. If we think about the receivables, that's the amount of money people owe us. People owe us $875 now. People paid us. Part of that, the question is going to be, who owes us the money? And of course, the GL doesn't tell us that, even though it tells us by date how we got to that amount. We need to scroll down to the subsidiary ledger. So if we go down to the subsidiary ledger, it looks like P that owes us, that paid us, that 720 has now been paid. So we're over here in U39. We're just going to post this same information. I'm going to say equals, and the same information that is in the GL for accounts receivable, we want to post that same information down here in the subsidiary ledger, but we want to put it in there by customer in this case. So here we have it, and this is what should look like after time in a subsidiary ledger. We have the 720 came in from P, and then they paid us. So it goes up, and then it goes down. Now they owe us the 420, and hopefully we get that 420 a little bit later. Also note that I added a column here, so all of these cells are going to be pushed down a bit, so just be aware of that. And then we have 875 is our total from all customers. That ties up to the 875 here. That ties out to the 875 on the trial balance. Also want to point out that we'll see that same trend on the GL. So we see the 720 here. We don't know who it's from, but we can see it there. We can see it there. So those are clearly probably related. And so that's what the general ledger should look like as well. So I'm going to make this larger on the taskbar, back up to 100%. We're going to scroll over to the left. We are now on 727. And that says we completed a job for L, we invoiced for 700, we received 200, and they owe us 500. So we did work. Did we get paid? Yeah, we got some money. So cash is affected. So cash has a debit balance. We're going to make it go up by doing the same thing to it. So I'm going to make that go up with another debit. Copy that. We're going to put that on top. Right click, paste 1, 2, 3. The amount we got is $200. Now this account, we're going to put that in the debit. But this is a little bit tricky because there's going to be 3 accounts affected instead of just 2 accounts, because we broke out what we received between 1, the cash, and 2, the IOU. So we got cash, but we also got something else for the work. We did 200 is what we received. We did work of 700. Therefore, we have an IOU of 500. That means that the receivable also went up by 500. Receivable is also an asset, similar to cash. We'd like cash better. We would have rather gotten the full 700, but 500 in the future is still an asset. Therefore, we're going to make it go up by doing the same thing to it, which in this case would be another debit. So we're going to copy that. We're going to put that in M12, right click, paste, 1, 2, 3, amount in the debit column being $500. All right, so we got 2 debits, 200, 500. That's going to add up to 700. That's what the credit should be. We still need an equal number of debits and credits. I could just type in negative 700. I'm going to use our plug formula. I call this the plug formula. So it's going to be the sum function, but I want to flip the sign. If I sum those up, I'll come up with a positive number. I want to come up with a negative number. So instead of hitting equals, I'm going to select negative SUM brackets. I'm also going to get in the habit of highlighting both the debit and credit column, even though there's nothing in the credit column, because there may be something in the future and we can do that. So it's just better to get in the practice of highlighting both those as we use a worksheet such as this. We want to optimize our references, and then we just need to know what that credit will be. And the question is, why are people paying us money and will pay us in the future? Because we earned revenue. So the revenue account is down here. It has a credit balance. It only goes up. Our customers only pay us. We don't pay our customers. Again, unless we broke something, but that would be an expense. So how do we make it go up? We do the same thing to it, which in this case would be another credit. So we're going to copy that. We're going to credit the revenue because we always credit revenue. Revenue only gets credited. We're going to paste it 1, 2, 3, and there it is. So now we're going to make this a little bit smaller. We're going to post this out. So I'm going to make this go down to like 70. I'm going to scroll over here so we can see as much as the GL as possible. We're going to post the cash first. It's on top. There's the cash. It's the first account on the trial balance, first account on the general ledger. This is called posting. We are in cell T20, which equals pointing to the 200, and once we hit enter, the cash will go up in the debit direction. Then receivable, second account over here. It's the second account on the trial balance. Therefore, it'll be the second account on the general ledger. There it is right here. we are increasing that as well. So we are in cell X14 equals, and we are going to point to that 500 in cell N12. That's going to make the 875 debit go up in the debit direction to 1,375. Next one, revenue account. Revenue account here. Revenue is down here in our blue area. It's the first part of the income statement. Notice that these light blue accounts basically are the breaking point between the balance sheet and the income statement. Balance sheet up here, income statement down here. Revenue first income statement account, it only goes up. All income statement accounts generally only go up. And that's going to be way over here. So we have assets, liabilities, equity, then here's revenue. Notice it only has credits because that's all we do to revenue. It only goes up in the credit direction. It's kind of like running a race. The time clock only goes up as well as the mileage. Never goes down. We're going to hit equals and scroll over here. And that will be the 700 and enter. So it went up in the credit direction from 1,845 up by 700 to 7,545. What happened to the net income for that transaction? Well, revenue went up, and revenue minus expenses means that net income must have gone up as well. So net income is 2,035. Revenue is beating expenses by 2,035. That is income, not a loss. Note also that we posted something to the receivable account. So receivable has this amount in it. How much do people owe us? People owe us 1,375. Well, who owes us the money and when are we going to get it? Well, we can look at the GL, but it doesn't really tell us that. It only tells us by date. We need the subsidiary ledger down here. So here's the subsidiary ledger posting that same information by client or customer, however we want to think about that. And this is from L, person L, or customer L. So L's down here, so we're going to say L. We're going to post the same information in the general ledger to the subsidiary ledger, this being the subsidiary ledger by client equals. And I'm looking for the same information. I'm just going to post that 500 right there. There it is, 500. If we add up all the accounts on the GL, they add up to 1,375, which ties out to the GL of 1,375, which ties out to the trial balance of 1,375. So we are good and can move forward. So we're going to make this larger on the taskbar again, back to 100%. Scrolling left, back down to the next 727. All right. Feel like it's a plane or something. So we got receiving cash from M company for work done in the past. All right, receiving cash. So is cash affected? Yeah, we received cash. So cash has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So we're going to right click, copy cash, put that on top in M15, right click and paste 1, 2, 3. How much are we getting from this transaction? We're getting 150. Therefore, we're going to have to credit 150 as well. We need an equal number of debits and credits. Every transaction has at least 2 accounts. What will the 150 be? Why are people paying us? Well, we did work, but we're not going to credit revenue because we didn't do the work now. We did it in the past. How do we know that? Because it says we received it for work done in the past. Therefore, we have already recorded the revenue, and we recorded an IOU from this customer. So there's the IOU account. They owe us. Customers owe us 1,375. This customer has paid us 150. Therefore, that amount needs to go down because they no longer owe us that much. How do we make it go down? We do the opposite thing to it. That's a debit, opposite being a credit. We're going to credit receivable. So again, what's happening here? We're getting one asset, which is better. We're losing the other asset. We're losing the IOU. We're getting the actual money. It's a good thing. All right, we're going to post this out. Going to make this smaller like so. Going to scroll on over here. There's the cash. It's a debit. It's our first account up here. We'll be in the debit side on the general ledger in T21 equals. We're going to point to that 150. That's going to make the debit balance go up in the debit direction from 6,150 up by 150 to 6,310. Here's the credit side, 150 on the credit to receivable. That's our second account right next to the cash. It's a very nice, easy thing to post because it's our first 2 accounts. I'm going to go over here to Y15. Y15 because that's just happened where it happened to lie. And we're going to say that that equals, and we're going to point to the credit of 150. That's going to get a debit balance. It's going to go down by 150 because we did the opposite thing to it from 1,375 to 1,225. We can also see that 1,225 here. Now, of course, we affected the accounts receivable. So accounts receivable, we always ask, well, how much do people owe us? 1,225. Well, who owes us and when are we going to get the money? Well, we can look at the GL, but it doesn't tell us that. We have to look at the subsidiary ledger. So we're going to go down here to subsidiary ledger. We want to post that same information down to the subsidiary ledger. And I'm going to look over here and see 150 looks like M. So M company, so paid us. So we're going to post that same information by customer down here so we can see who owes us the money and track that information. Very vitally important. So we can say equals in Y46 equals the 150. So now M doesn't owe us any money. This is what a subsidiary ledger should look like. You know, owed us money, paid us money, don't owe us any money because they paid us. And if we add that up, it ties out to 1225 on the subsidiary ledger, ties out to the general ledger, ties out to the trial balance. We're looking good. We also see that trend here as well. There's the 150, there's the 150, there's the 720, there's the 720. We should be able to see that pattern in the receivable account. You're going to make this a bit larger, back up to the 100%, scrolling over to the left, looking at the next transaction. We just posted that 150, so we're on 728, which says we paid L, H, and G for purchase in the past. All right, so now we paid something. So is cash affected? Yeah, we paid stuff. So cash is debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. So I'm going to copy that. We're going to put that on the bottom. Here's the date. We're going to put it on the bottom of the date because it's a credit. We're going to paste it. 1, 2, 3. We're going to make it a negative number. How much did we pay? Negative 75. Then we're going to debit something. We're going to put the debit on top because traditionally debits go on top. 75. And the only question is, what will the debit be? Now we bought something, but we bought it in the past. Therefore, we have an IOU account, kind of like a credit card account, and that is the payable account. So we're paying off the payable. That payable means that we owe people money. We don't owe them any money, that much money anymore. We owe them 75 less because we paid it. So that needs to go down. How do we make something go down? We do the opposite thing to it. That's a credit. The opposite is a debit. So we need to debit it. We already knew that because we credited cash. So I'm going to copy that. That's what we're going to debit, the payable, making the payable go down because we don't owe as much money anymore. So we're going to make this smaller on the taskbar, back down to 75%. Going to scroll on over so we can see more of the general ledger. We're going to post the accounts payable account on top here. So there it is, our first orange account on the trial balance, first orange account on the general ledger. We are in the debit half of it, so we are in AF14. That equals, we're going to point to this 75. That's going to bring the debit down, because we're doing the opposite thing to it, by 75 from 1965 to 1890. So remember, keep some focus on these credit balance accounts like payable, because we do not see them as often as we do, say, cash. So you want to see how the payables are reacting. The same thing to it makes it go up, the opposite makes it go down. So we did the opposite. It's a credit, did the opposite, makes it go down. So here's the cash. It has a credit. Here's the cash up here on the trial balance. Here's the cash over here. So we're going to be in the credit column in U22. So U22 equals, and we're going to point to that 75. And that's going to make the debit balance go down because we did the opposite thing to it. This happens to be a debit, the opposite being a credit, making it go down. Now, of course, we have the payable account we did something to. Payable means, how much do we owe people? We owe people and companies $1,890. Well, who do we owe and when do we have to pay them? Well, the GL doesn't tell us that. It gives us a lot of detail, but it only tells us by date. So if we scroll down here, it gives us more detail, and we owe L, H, and G. They're getting mad at us again because we're not paying them, so we've got to pay them so we can get more supplies. So we're going to post the same information here on the general ledger. This is a debit, so we're going to say that equals, and we're going to point to this 75 and enter. So now we paid them off, and we're back down to 1390. We paid kind of the minimum balance so we can keep buying stuff from them. And if we add that up, there we have it, and we add up to 1890 in the accounts payable subsidiary ledger. That ties out to the general ledger, and that ties out to the trial balance. All right, let's make this large again. We're going to make this large again. Back up to 100. Next transaction is on 730, and it says we received cash from P company for work done in the past. All right, so is cash affected? Yeah, we received cash. Cash is a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So we're going to copy that, going to put that on top. Right click in M21, paste it 1, 2, 3. The amount that we received being the 425. So 425. We're going to debit something for 425. So I'm going to do it with a negative of that number. And what will we credit? If we debit 425, we credit something as well. The credit will go to. It's not going to be revenue in this case because we did the work in the past. and we have an IOU from our clients being here. It has a debit balance. They no longer owe us that money because they paid us. It needs to go down. How do we make it go down? We do the opposite thing to it, like everything. And the opposite thing in this case would be a credit because that's a debit. So that's a debit balance. We need to make it go down. We do the opposite thing to it, which is a credit. We already knew that because we debited the cash. So we're going to paste that out. We're going to post this out. We've seen this transaction before. I'm going to make this a bit smaller so we can see our work and make that go down to 70. Scroll over a little bit. So cash, there's our first account. We're going to post this cash. It's a first account on the trial balance, therefore it's the first account on the general ledger, and here it is in T23. So T23 equals that 425, bringing the balance up from 62352 to 6660. There's the receivable. Here it is on the trial balance. Here it is on the general ledger. It's a credit. We're in the credit side in Y19 because that's where it's at. So we're going to say this equals the 425. That debit's going to go down because we're doing the opposite thing to it from 1225 to 800. Okay, so now we're going to have to also post that to the subsidiary ledger. Why? Because the accounts receivable is one of our most important accounts. We're always going to ask, who owes us money? And we're going to say, people owe us 800. Who owes us? We're going to have to find and collect on that. And in order to do that, we don't get that information from the general ledger. We need to get it from the subsidiary ledger. So if we scroll down to the subsidiary ledger down here, it looks like P is the one who paid us. That 425 is now being paid. So we're going to post the same information. Now we're in U40 equals, and I'm going to point to that 425 and enter. So we should see this kind of transaction, this kind of activity in the subsidiary ledger. Billed them, they paid us. Billed them, they paid us. All of our customers add up on the subsidiary ledger to 800, which ties out to the general ledger, which ties out to the trial balance. And we see that same pattern here in the accounts receivable. Billed them, they paid us, right? Billed them, they paid us. All right, and now we're going to make this larger. I think we have one more transaction we're going to do, and then we're going to be done. We have to stop there because that's all we have, and we can move on to the next part. We got 730. So now the owner draws out money for personal use. So is cash affected? In this case, yeah, the owner drew it out, meaning it's coming out of the business. Cash has a debit balance. We need to make it go down because it's going out. So we're going to copy that, and we're going to do the opposite thing to it and credit it. So I'm going to put that on the bottom. We're going to credit the cash. The amount pulled out was 500. We're going to debit something for 500 as well. And what are we going to debit if the owner pulled the money out of business? Well, that's going to be in the equity section here. We have the capital account that kind of represents the money owed to the owner, so it would kind of make sense that we would make that go down. But we're going to create this other account called drawings. Why? Because we want to track how much we're drawing out of the company in a particular time period. So in this case, we're going to have, it's in the equity section, not part of the income statement. It's kind of like a contra equity section account. Here's our equity account. This is going to be a debit balance account that really is bringing down this credit balance. But we're breaking it out, so it's kind of like a contra equity account. Why contra equity? Equity has a credit balance. This is going to be an account that's in the equity section, but it has a debit balance. Therefore, it's contra to the norm. So we're going to say copy that. I'm going to put that on top in M24. Right click, paste it, 1, 2, 3. Let's make this smaller and post this last one out. So I'm going to go down to the taskbar, make this go down to 70, scroll over. So here's the drawing account. So drawings is here. Here it is on the trial balance. So it's going to be our second like light blue account. So we have assets, liabilities, equity on the general ledger. Here's the drawings account in AJ24. That equals, we're going to point to this 500. That's going to make this go up by 500. We see that appear here in the trial balance. We see we're out of balance by the 500. Did not affect net income. It's not part of net income. That's the point. We don't want to expense the draws. That's not good. You're not supposed to do that. All right. And then the credit's going to be for 500. That's in cash. Here's the cash. Cash is here. Cash is our favorite account. It gets the most activity. It's the most popular. So we're down here in U24, and that equals, we're going to point to that 500. And we have the debit here. That's the credit. It's going to make the debit balance go from 6660 down to 6160. And there's our last transaction. So here we have our trial balance now. We call this the unadjusted trial balance because we recorded it, but we haven't done any year or period or month end adjustments to it. We're going to take this amount now and adjust a few of those accounts next time in the adjusting entries process.